But let's get a read on some of the top themes we're watching, particularly in the commodity space this week. Pete McGuire of XM joins us now. Peter, great to have your company on the program today. Before we get into some of the macro, got to kick it off with the commodity space, particularly iron ore, reaching that all-important $100 level. No doubt iron ore plays here at home will be in focus at the Open today. It's a huge part of our market. But what do you make of the remarkable resilience we've seen in this particular commodity?
Well, good morning, Daniel. Good morning, Ingrid. It's been extraordinary as far as push up, and, the demand we understand has been unheralded. The export numbers are just incredible. So it's hitting triple digits, probably further push from here. And who knows, you might even see 110. I saw that Credit Suisse were looking 110 as far as a forecast moving forward over the next matter of, a quarter or two. So seems to be fairly solid, though it's not lifting a lot of the other base metals, but it's taking the lead at the moment, and I suppose it's very good for the Aussies.
Well, is that really because there is no alternative at the moment when it comes to iron ore? And we're seeing these China numbers as far as their construction index. That keeps going up despite their exports falling. Is this going to be a continuing theme as we move through June?
Well, I think so, Daniel. Another thing that needs to be taken into consideration is the devastation as far as COVID-19 on Brazil. And that's only worsening as each day, unfortunately, goes on for them. So that's going to greatly impact as far as their export numbers, and Australia is going to be able to take up a lot of that slack. So it plays handsomely. We were the first to do serious lockdowns, and we seem to be one of the first to coming out on the other side. So if we can continue this and remain in good health, and that's the most important factor, then it's going to be very strong, I think, over the next quarter or two, while other countries suffer greatly.
Yeah, lots to watch. Oil prices also, when you look at where the oil price has been tracking, we've got an OPEC meeting coming up, Peter, in the next couple of weeks. What are you expecting, and how are you expecting it to play out in the lead up to that meeting?
Well, actually yesterday, they're still in Europe time now, they're looking at bringing it forward, Ingrid, to possibly this Thursday, which is the 4th of June. So it would be an online meeting, and it's just no doubt looking at, cutting as far as production. The big B words coming out as far as over 1 billion barrels excess capacity out there from floating ships around the world to storage facilities. So that's got to come back into the market, as we understand, and not many countries can maintain these sort of production numbers at $30 to $35 a barrel. They want some help. We could see further downward push as far as US dollar, which could force a few of these markets, as far as crude, being pushed to the upside, I think, over the next matter of days.
But what do you make of these short extensions that they're considering, in terms of them saying, it's moving fast situation in the oil market, short-term measures, which won't disrupt, I guess, the rebalancing of the market. What's your take on those measures?
Well, the short term are quite fine, but remembering that traditionally this time of year you're seeing an increase as far as consumption numbers. So if we see a growth as far as consumption, China comes back on, US, and we see, the return to that so-called driving season, then that's going to look from a consumption side, so higher consumption, which in turn is hopefully, for producers' standpoint, going to be far better for them. But remembering from a consumer's point, it's certainly great to be a consumer with oil at these sort of prices at the moment.
But could it not just be the B word? There could be the R word as well, because Russia's one of those countries that does have the ability to turn a few more taps off, even if it's not to the extent that the market needs. Will that type of movement, if we have a meeting this week, will that accelerate the price upwards for oil, do you think?
Well, it could well do. I mean, Trump's in constant contact with MBS out of Saudi, and of course Putin. So we could see a ratchet down as far as production numbers, which in turn is going to springboard the price up a little bit. So it's very much a wait and see. We've got to see what happens. Of course, from a bigger picture, I think China-US talks at the moment and where that escalates. And then you've got the ongoing domestic issues which are sweeping across US cities at the moment. As far as race riots. So there's so many different moving parts at the moment, Daniel, that really create much concern, and it's going to be a very, very interesting week.
What else are you watching? Gold always in focus when we talk commodities, obviously, and in particular the run-up we've seen in gold. Do you expect it to continue going forward? We're starting to see a reopening of economies around the globe. Of course, trade tensions still very much existing. We've got unrest now in the United States as well. How does that play out for gold?
Well, it's had a nice, the last couple of trading sessions have been quite strong, Ingrid, back over 1750 trading range between that 17.25 to 17.55 range. I feel as though that US dollar index, it's off 2% in the last week or so. That US dollar index was over 100. Now it's at that 98 level. And I think there's further downward pressure on that US dollar index in the short term. So that's going to be a force up for Aussie, going to be a force up for gold. And there's such a large chasm between Wall Street and Main Street. 40 million unemployed in the States, unheralded before. We've never seen numbers like this. And I think that's going to be the push up over the next matter of weeks for gold.
And we're going to see some more of that data coming out this week with continuing claims, obviously in focus, non-farms coming up on Friday. But back to the Australian dollar, is this one of those times where we might see a dislocation where the Aussie could see continuing strength with iron being strong with all other factors at play, but the equity markets might see that downward pressure?
I think so, Daniel, and the reason is we're nearly above that 200-day moving average. You could snap it, and then from there it runs up a little bit further, possibly that 67.5. So the momentum may build. I'm not too worried about some of those numbers coming out. I think a lot of the bad news has already been absorbed into the market as far as the Aussie. So that US dollar coming off, getting above that 200-day moving average, I think it's taken a lot of people by surprise. A lot of forecasters or analysts were looking, the Aussie by this time of year would have been a lot lower. But it's certainly bounced, and it's bounced well, and we've just got to see what happens as far as US-China this week, Hong Kong and so on, which could be a dampener for the Aussie.
Yeah, lots to watch, Peter. I really appreciate your time on the program. Thank you so much for joining us.
Thank you, Ingrid. Thank you, Daniel.